Hello everybody, Tortoise Investing coming at ya today. It is Friday. Fridays we usually do portfolio updates, but I'm going to save that for next Friday is when we're going to be doing the portfolio updates so you can see some of the changes and moving around and things that I've done with my portfolio. If you are new, please hit that like and subscribe button. I greatly appreciate it. We're at 149 and climbing every day it seems, which is fantastic. I greatly appreciate everyone that likes and comments. Let me know down below what you've been looking into, what you've been buying. If you got any questions at all, just hit me up. So I had a commenter wanting me to dive into Drgo. So that is what we will be doing today. The iShares Core Dividend Growth ETF. And it is a very popular one amongst dividend investors. I see this in so many portfolios. I don't personally have it. Maybe I need it. Let's see what we got going on here. So it does have a dividend yield of 2.32%. And I'm pretty sure it's got a low expense ratio. Yep, 0.08%. Not too bad. Not too bad at all. As you can see, here's how it kind of stacks up against the S&P 500 VOO and SHD, but we're going to look at that through bar chart. I feel like that's a little bit better. So let's go ahead and break it down here. We got the sectors, 18% is in finance, 15% is in health technologies. You got 14.8% in electronic technology and 5.5% is in the other technology. So about 20% in total tech. Not too bad. Consumers at 8%. Energy is at 7%. Utilities is at 6%. Retail trades 5%. Producer, what is it? Manufacturer, I'm assuming, is at 3.9%, and we got the consumer sector at 3.6%. Let's take a quick look at the holdings here. This is through ETF.com. It's super easy to use. It is a very convenient website. So it's got 3.2% in Exxon. We got 3.19% in Apple. We got 3.14% in JP Morgan. 3.1% in Microsoft. 2.69% in Johnson & Johnson. Got 2.4% in Chevron. Nice. These are all good holdings. Let's go ahead and go to Qualtrim. Probably should have already had this up, but I didn't. That's okay. Let's take a look at the top 5 holdings that we've got here. So we got Exxon. Going to go ahead, take a look at it through Qualtrim Insights. See what we got going on here. So a lot of your energy stocks have been doing absolutely amazing the last 2 years. Cash flow has been so heavy with these, and DGRO is taking advantage of that in a big way. They got in just at the right time, I do believe. And, I mean, energy is going to be here to stay. You're always going to have, gas is always going to be around, I feel, at least for the next couple decades. Next up on it was Apple. Take a quick look at it here through Qualtrim. We all know Apple is just ticking in all the right directions. Revenue, net income, EPS, everything is just flowing ever so nicely. I would like to have Apple in my portfolio. I'd need it to drop to like the 120s, and then I would bite at it. So who knows? Maybe I can get that later on this year if we have that drop that everyone is saying is going to happen. But yeah, Apple, very reliable. I'm sure everyone that's a dividend investor knows about Apple. All right. So another very cash flow on hand holding. Next up is JP Morgan. JP Morgan, again, looks like they are flowing with the cash. Another very reliable financial stock, a favorite amongst a lot of people. You always want to see more cash and debt. Another one that's pretty good. No complaints there. Microsoft. Let's go ahead and check it out through Qualtrim. Again, everything's ticking in the right direction. I love Microsoft. I would like to see Microsoft drop to the 230s, and then I would take a bite at it as well. Again, everything is just ticking in the right direction. Another cash flow heavy holding in this ETF. Very nice. And of course, Johnson & Johnson has a beautiful, beautiful financial sheet as well. Everything looks good with this. Again, another one that's got more cash than debt. Yeah, I'm noticing a trend here. Very cash-heavy stocks. Not a bad thing. And I'm going to go ahead and tell you that Chevron's going to be the same way. AbbVie's a very top-line healthcare stock. Procter & Gamble, the old reliable, been increasing its dividend for 60 years. Pfizer, another good one. And Broadcom, I think, bringing out the top 10 here. I really, really like Broadcom. Let's go ahead. Let's take a quick look at Broadcom too while we got Qualtrim pulled up here. I really like this stock. It is so pricey. But, I mean, it warrants it. It is definitely worth it because look at just boom, 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 boom. Everything is just ticking in the right direction for this. And I think this is going to be like the semiconductor stock that makes it. If you don't know about the whole Intel situation, Intel decreased their dividend by 65%, which is gotta hurt. But yeah, a lot of great holdings here. Let's just take a quick look here. A little bit further down, we got Home Depot, Merck, Coca-Cola, Bank of America, Cisco, Pepsi, United Healthcare. A lot of great holdings. I haven't really dove too much into it, so I mean, this is kind of just me reacting to everything. It has 448 total holdings, which is a little heavy for me, but I mean, it's well allocated. It looks like it's got 1% or more in a lot of great stocks, which I really like. I like that. I like that a lot. Yes. Okay, let's go ahead and take a look here on a bar chart. Over the 1 year, it looks like DGRO and SCHD have both been outperforming the S&P 500. The 2 year, again, outperforming. The 3 year, DGRO is right there at it. With dividends invested, that's definitely going to be passing it up. The 5 year, it looks like same situations with dividends reinvested. It's going to be passing it up. And the 10-year chart, it looks like DGRO didn't come out 10 years ago. It was like, what, like 9, 8.5? But yeah, I mean, it's not a bad holding. It holds a lot of great companies. This might be something that I end up adding to my portfolio as well, because right now I've got a 40% allocation to ETFs. I could definitely see me squeezing this in there and maybe having like a 20-15-15 deal. I don't know. That's interesting. I like DGR. I was talking smack on it before, but I mean, now that I've looked at it and I've seen some of its holdings, it's not bad at all. I like what I see. But yeah, that's my thoughts on it. Who knows? I might end up allocating this into my portfolio somewhere because I do like the holdings it's got. It's got a good amount of really good high tech. Has a lot of great tech holdings in Apple, Microsoft, and Broadcom. Love that. I really like that a lot. But yeah, guys, DGRO gets a thumbs up from me. I do think that it's got some potential. Again, I'm not a financial advisor. I'm not saying go out and buy this. You're gonna be rich, but might be not a bad idea to dollar cost average into it. But yeah, guys. Hope you enjoyed this little breakdown of DGRO. Again, you got any questions, wondering about anything, let me know down below. And until next time, see yous.